When that happened, my dad had all of his bank accounts frozen. And so when I was a young kid, I grew up with this deep mistrust of centralized institutions. I, not knowing anything about Bitcoin, read the white paper, and all of a sudden, all of these stories about what my dad was telling me came back.
Is there any rejection that particularly stood out for you?
I think if you talk to any ambitious person who has deep conviction in their idea, they'll always remember all the rejections is the truth of it. But I try to look at it positively.
Welcome to another episode of the Inquisitive VC. Today I'm excited to have with us Hootie Rashidifard, founder and general partner of Hash3, a $30 million crypto fund. Hootie's journey is particularly compelling, from growing up with a deep mistrust of centralized institutions due to his Iranian background to discovering the Bitcoin white paper. After spending 5 years at Canaan Partners championing crypto and building expertise in the space, Hootie founded Hash3 in 2022 with a mission to bring self-sovereignty to all end users. In this episode, we'll dive into Hootie's perspective on finding alpha in contrarian crypto deals, his approach to building a focused fund, and the philosophy behind Hash3's vision, and more. This season of the Inquisitive VC is proudly sponsored by Carta. Carta is transforming how private capital operates, connecting founders, investors, and LPs through purpose-built software and services. Trusted by over 65,000 companies in over 160 countries, Carta supports everything from equity management to fund administration, powering nearly $185 billion in assets across over 9,000 funds and SPVs. Whether you're building a company or managing a fund, Carta is the modern infrastructure private markets have been waiting for. If you'd like to find out more, check out their website in the show notes. Thanks for joining me, Hootie. Excited to chat today.
Yeah, I'm excited to chat too.
I'm really keen to start off with your background, how you got into the world of crypto and how you got into venture capital.
Yep, for sure. Crypto is sort of a bit of a longer story for me. My parents are Iranian immigrants, and they came to the U.S. in the 70s. They came here for college. Their plan was to go back to Iran, but the Iranian Revolution happened. When that happened, my dad had all of his bank accounts frozen. So this is like pretty weird thing to happen, and probably pretty terrifying, given you don't really speak the language here. And so when I was a young kid, I grew up with like this deep mistrust of centralized institutions. Like my dad always like, don't trust the banks, don't trust insurance companies, going on and on and on. And that just sort of like nestled in my head. In 2012, I came across the Bitcoin white paper. I was in investment banking at the time. I was sitting in a bullpen of a bunch of analysts. I remember it. It was like midnight or 1 a.m. And the guy next to me was like, Hootie, Bitcoin just hit $80. And, I think he was excited about the speculative aspect of Bitcoin. I, not knowing anything about Bitcoin, read the white paper, and all of a sudden, all of these stories about what my dad was telling me came back. And so this idea of having a way to transfer value without having a centralized institution was like literally what happened to my dad. And so um I got pretty excited about it. Funny enough, we actually tried to buy Bitcoin on Mount Gox at the time, but we couldn't get through KYC for some reason. Like it was like down, like we had our passports out trying to buy, but we weren't able to do that. So later on, I joined this fund called Canaan Partners in 2017, and I when I joined them, I was basically like looking at areas that no other partners had explored. And Canaan had made some crypto related investments in 2013, but no one really like covered it. And so when I came in 2017, I analyzed a few different sectors, and I said, oh, crypto is pretty interesting. Once again, I sort of had this like weird like affinity for this technology given my background. And so during that year, I made a lot of presentations to the partnership to explain like why I thought crypto was interesting, why I thought it was a category where we should put a non-zero percentage of capital. And funny enough, simultaneously, there's a whole class of junior VCs that did the same thing at various funds. And it's funny because I now they've gone on to do things in crypto full time, and so like it's this whole class of people that went through that same process.
Yeah.
But anyway, we did that at my last fund. They did start investing in crypto, and I was the one sort of managing a lot of it, or at least advising how we custodize, and if we're going to stake, and doing a lot of the research there. Um, and I was at that fund for 5 years before starting Hash3. So we started Hash3 in 2022. It's a $30 million fund, pre-seed and seed, focused fund, largely focused on infrastructure. And so, yeah, we've been running it for 3 years now.
Fantastic. No, I think the background of, understanding and having that personal relationship with Bitcoin and crypto seems to be like an interesting way a lot of people get in, and especially when you live out in, I feel like in the US or even New Zealand, where we have great financial systems, it's hard to understand why it's useful, but when you have this type of history, it makes clear sense.
Yeah, I actually use that example quite a bit. Is like the U.S. You have, like, on average, like relatively compared to the world, you have a lot of trust in financial institutions for the most part. I think Iranian Revolution and my parents being Iranian, like that's like kind of this like rare circumstance. But I just want to give a very quick example about Iran and my grandpa. My grandpa is he was 95 years old. He passed away last year. My grandpa didn't have an email address, but he knew what Bitcoin was. And when my parents came to the U.S., the tuman, the Iranian currency, was trading at 7 tuman to $1. Okay, so that was the exchange rate. Today, the exchange rate for tuman to dollar is 30,000 tuman to $1. That's the legal
Wow.
rate. And
Yeah.
the black market rate is 150,000 tuman to $1. So that means people are so desperate to get out of tuman that they're willing to spend 5 times the quote unquote legal rate. And that just goes to show you what, if you do not like a centralized institution, if they are nefarious, what can be done to the native currency, right? And you're stacking that Tuman inflation on top of US dollar inflation. We all, like in the US, we complain like, oh, a cup of coffee is so expensive now, or whatever it is. Like inflation has occurred over the last 5 years. Imagine if your currency has gone up thousands of percentages on top of the base rate inflating. So
Yeah.
it is like a real problem for a very large portion of the globe. I think in certain countries you are protected from that because you have some level of trust. But there might be a day where that trust gets eroded, and if we don't have decentralized systems, then you can experience what happened in Iran in the U.S.
Yep. No, that's a fantastic example. Um, so I guess stepping a bit forward in terms of going from Canaan to starting Hash3, would love to understand, where was that inflection point when you decided you need to start to leave and start a new fund?
Yeah. So once again, I started focusing on crypto, or researching crypto, in 2017, and at the time there weren't a lot of dedicated crypto venture vehicles, right? There were only maybe a handful, maybe 10. They were pretty small. They're pretty rocky in terms of, are they going to stick around? Um, and obviously a lot of those have stuck around and they've done very well. So I'm not saying anything mean about them. I'm just saying, from a founder's perspective, if you're taking capital from a capital source and you don't know if they're going to have a fund 2 or fund 3, you might be a little bit worried. And so I'm explaining that because at my last fund has been around for 40 years. They raise an $800 million vehicle every 3 years. Their fundraising process is like 3 weeks long. Like they have long-standing LPs um, that commit to them. They'll commit like a quarter of the fund, right? So as a founder, if you're building your cap table, you might want some of those crypto native LPs, but you might also want some stable capital, right? That's a good diversification. Now, what happened from 2017 to 2021 was that a lot of those successful crypto funds from 2017 had raised much larger vehicles, and they did have that stability. And so, from a founder perspective, the the value that a traditional venture fund brought to your cap table was significantly lower, right? Because a crypto native fund will help you on a bunch of crypto native things, right? They might have good relationships with market makers. They might be able to review your market maker contracts. They might have relationships at hedge funds so they could buy your liquid token. They might have opinions on how to structure your tokenomics. Whereas traditional funds, they may have done like 1 to 3 to 4 token protocols in terms of deals in their portfolio, but they haven't done 20 or 30 or 40 or 50 or whatever the number is. And so um, that was the time, and that was about 2021 where that happened, where you had a lot of those funds that raised a first fund in 2017, 2018 really have established themselves, and they had raised larger vehicles, and they were going to stick around for a while. And being at a traditional fund, I just recognize that if I want to work with the best crypto founders and um, ultimately work with the best projects or companies that have the most impact, I would need to verticalize more, and go more specifically, tailor a capital source more specifically to the asset class.
Understood. Okay, that makes sense. And then, so how did you go down the path of, thinking more deeply about it? Tell me about thinking about the sizing of the fund, what stage to invest at, the thesis. Would love to understand that.
Yeah, for sure. I think like as a venture investor, both as an individual and as an institution, you always want to ask yourself, like, what is your edge? Like, how do you differentiate yourself? How do you win the ability to get on a cap table? And maybe the light bulb moment that I had at my last fund was a founder telling me, "Hey, Hootie, we're letting you on the cap table because of you. We're not letting you on the cap table because of Kanan." And that was really the point where it was like, okay, like I need to explore other opportunities if I want to work with the best founders. And so when you're thinking about starting your own fund, you really need to think about like what differentiates me. So, okay, so great. I'm at Canaan. They have $800 million, 7 billion AUM fund. They have a full finance team and help with a recruiter. And so I'm going to leave a lot of those services or the value add that they provide, and also lose a lot of time as an investor because now I have to go fundraise, I have to run operations to some extent. So what is going to be my edge to make up for that loss? Okay. And that's what I really spent a lot of time thinking about when starting Hash 3. And that actually came through pretty serendipitously. So I was in the process of interviewing at crypto native funds, because I was like, well, me as an individual, it's hard. Like, I think like if you're an operator and you started a successful company or a successful crypto protocol, you could go on to be, a great investor where you can, I've seen this playbook before. I have all these relationships, and you see that a lot in crypto, right? You can see that with Constantine from Lido creating Cyberfund. You could see that with Bodhi Ventures. So Kane from Synthetics and Jordan from Synthetics. You could even see that with some of these more ecosystem specific funds, like the Big Brain Holdings. Like those guys really like have been through it, and they've seen a lot, and so that's value additive. And for me, like it came around serendipitously where I was interviewing at these crypto native funds, and I reached out to a friend of mine, Prabhakar Reddy, who's one of the co-founders of FalconX, and I just sort of asked him for advice, and he was like, "You should go talk to Surajit Chatterjee." Surajit at the time was the chief product officer at Coinbase, and he was thinking about starting a fund, but he didn't. He wanted to be an LP and he wanted to be an advisor, but he didn't want to operate or run or be a decision maker. And that introduction really catalyzed the concept behind Hash 3, and that concept was really born between conversations between myself and Surjit, and that ultimately became our edge for the fund, and how we win spots on cap tables.
That sounds like a really valuable introduction. So that's super cool. Um, it
Yeah.
seems like, well, it sounds like from the story you weren't that involved in like fundraising at Canaan. Correct me if I'm wrong. So your first
That's
time
right. Yeah.
fundraising was with Hash3. Would love to understand that journey as like first time fundraising for Fund One. How was that?
Yeah. So, I mean, fundraising is essential to running a fund, believe it or not. I think some investors or some junior VCs don't really understand that concept, and which it seems kind of obvious when you say it, but I think people are like, oh, like if you look at like my track record, like it's good, and one short of having like pretty significant DPI or hitting like some big winner, and even if you do, like I think LPs always squint and say, is this a one-time thing or is this a scalable or repeatable thing? It's really hard to get capital. Once again, if you're a successful operator, if you started a business and it sold for multiple billions of dollars or whatever, like yes, you can go to an LP and say I'm going to create an operator-led fund or whatever. So raising capital. Um, Once again, I was in a position where I met Surrogate. The concept behind Hash3 was really to raise about half of the capital from well-known operators and entrepreneurs, folks who have built multi-billion-dollar businesses, and then raise the other half of the capital from institutional capital sources. Now, Surrogate had deep relationships with a lot of these entrepreneurs and operators, and that was really so that ends up being about half of the capital that we raised for Fund One. That's really like the momentum that we needed to go out and raise the rest of the capital, and so that was kind of the, I guess, quote unquote trick that we used, and that's going to be like the really difficult part for anyone trying to go start their own fund, is getting that initial momentum. So I remember this quote. Someone told me this was bull market of 2021. Everyone is like capital is flying out the door. FTX is just wiring out hundreds of millions of dollars a week or whatever. Turns out it was depositors' money. But um, I remember this guy told me it doesn't make sense to raise a crypto fund unless it's $100 million. Okay. And that was just like the idea at the time. And that just goes to show you like how easy people thought it was to raise capital.
Yeah.
Um, but raising that first chunk of capital is the hardest part. And then once you do that, it tends to get not pretty easy, but it tends to get easier. And so it allows you to create urgency in the rest of the fundraise. So that was kind of like the catalyst that really helped me for Hash3. I won't, I fundraised through the depths of 2022. So I had sort of a uniquely scarring experience. So I won't by any means say it was easy, but if I don't think if I had that initial bulk of capital, I would be in a position where Fund One was raised. Yeah,
Yeah.
but maybe at all. I mean, maybe it would have been significantly smaller. It would be quite difficult.
Yeah. Yeah. Is there any rejection that particularly stood out for you?
I think if you talk to any ambitious person who is really has deep conviction in their idea, they'll always remember all the rejections. Is the truth of it. But I try to look at it positively. So there are definitely rejections that stay in my mind. I'll just I've had all different types of rejections. Once again, I raised through the depths of 2022. So any excuse you wanted as an LP, you got it. Okay. So like Luna exploded, you got a bunch of excuses. Summer slowdown, you got more excuses. FTX blew up. Oh, we don't believe in the asset class, lots of excuses. Solana went from 260 down to $8, lots of excuses. Leverage blew up in every single sort of way, excuses, right? So but I think like some people, I've had people who had docs fully filled out and approved, KYC approved, but didn't sign the docs and the day of the close. I've had closes where we're oversubscribed and Luna blew up and like $10 million just said, "Hey, we're not going." I had a family office once that I spoke to someone there and they were like, "Okay, we're in for 5 million." And then I met the person whose name was on like the family office person, the guy, and he was like, "No, no, we want to do 10 million." And I was like, "Okay, like first let's just start at 5. We'll see where that goes." And and then like FTX blew up and they froze commitments for a quarter. Like it just like I've seen it all.
Yeah.
But my positive spin on it, and maybe this is hopefully something that maybe other fund managers can take away, is that look, if these people are on the edge when they're committing, um, if you twist their arms and get them to commit, a lot of times that creates problems for you down the road, right? I don't ever want to send out a capital call and I hear like groaning on the other end. Like you don't want that to happen, because then you have people who are trying to sell their stakes later on, people who are trying to do, and that just always mentally that doesn't lead to the best place to make the best investments, right? You want your LPs to believe in you, and you don't want to feel that they're hesitant to participate.
No, that's great advice for any upcoming fund managers. So as you raise this fund, I would love to understand how you thought about, deploying it in the sense of, concentration versus diversification and check sizing, reserves. Um, that Interested to hear your thoughts there.
Yeah. So the way that we deploy the fund, so the fund, 75% of it goes to pre-seed and seed opportunities. 25% of it goes into liquid opportunities, what I call reserve investments. Liquid opportunities are used as a way to, first off, liquid opportunities are not short-term trading. We don't farm it. There's no yield strategy. There's no shorting, etc. It's long-term holds. If we think that we're entering a position and it's going to create short-term cap gains, it's not really a position for us. I mean, look, if we buy a token and it goes up 200x in day one, like you're not doing your fiduciary responsibility if you don't, take chips off the table. That's just the truth of the matter. But uh, those are long-term holds, and those are a way for us to get market beta, but also have DPI back to our LPs and recycle capital to fill the fee hole, and that's essential, right? You have to fill the fee hole to get top decile returns. On the pre-seed and seed stage side, how we think about it is any check that's written needs to have the potential for a fund returning outcome. Okay, so that means any check that we write needs to be able to return $30 million back to the fund. And obviously that doesn't happen every single time. You're placing a lot of bets for that to happen, but it's like a what if this goes right scenario. Okay, that's the way that we think about it. And sometimes um, those opportunities might require reserves and sometimes it might not. So, like, what's a case of each? It might not require reserves if you're investing in a protocol and you buy enough of that protocol up front and it's non-dilutive until the token gets launched. It might require reserves if you didn't get your full position and you're tracking the team and you want to buy more in subsequent rounds, or if things are going right and you want to double down, which we have done in multiple opportunities in the fund. Um, but the way I think about investments in that pre-seed and seed bucket, I think of them in terms of alpha and beta. So what does that really mean? Beta are deals where the founder is really well known. The founder knows every venture fund. They're a really prominent figure. They're going to raise a seed round. It's going to be really expensive. And the hope is that the outcome is really expensive too, right? That's the hope. High entry valuation, but also high exit valuation. Now, the problem with those is getting your allocation, right? Or one, stomaching the price, and two, getting your allocation. And I think if you could generally do those deals, it's good to work with people who are top tier in the asset class. But in my opinion, that's not where the real money is made, especially given the just like the astronomical level of some of these entry valuations. Real money is made on the alpha side. And alpha is, the way I describe it is like it could be an ecosystem that no one's looking at. So For example, Hyperliquid very early on, we invested in Felix, an early lending protocol on Hyperliquid. We invested in that pre-seed. They only raised 600K. We did half the round, and that team has done exceptionally well since running it. And this was before anyone was looking at any Hyperliquid deal, right? So new ecosystems, young founders. So also that deal, Felix, the two founders were still in college when we did the deal. They were doing their senior year of college. So young founders, you're taking a bet on someone who doesn't have the cachet of that really amazing founder who's done a lot of stuff in the category. Um, Three is like broken companies, like companies that are going to require a lot of work. Maybe you need to change the management team around. Maybe you need to recap it. You got to do all this stuff. People just don't want to roll up their sleeves and do that. And then the last one is sort of like distressed assets, just broadly. So things that are sort of like painting the edges of what an early stage deal means. So like an example of that is like we bought Solana out of the FTX estate. I even looked at buying Hyperliquid points before Hyperliquid launched. So these are just uniquely crypto opportunities that could be extremely profitable. But like I think that's what like generally generates a lot of the returns in the category. Like the beta stuff is great and they're nice like flashy names that you can put on your website. And hopefully they return well too. Like that's great, and maybe they help you sell the fund to the next founder.
Mm.
But in general, I think like the alpha deals are the ones that like really differentiate you, get in at low valuations,
Yeah.
contrarian deals that could generate massive returns.
Yeah. No, very interesting. I was this morning I was reading a tweet by somebody from A16Z. I'm not sure if you saw it, about how venture investors end up investing in consensus deals, even though they like to say that they're non-consensus. And most returns are probably driven by consensus deals anyway. Curious on your opinion there when it comes to crypto, especially as early stage investors. Like I felt like, it's easier to say that you're a non-consensus investor when you're investing at pre-seed, because there's actually not a lot to look at and prove. And you might be, unless it is that, very credible founder or something like that. But if it's some of the stuff that you're talking about, that might be hard. But, if you're doing a Series A investment, there might be a lot of things to look at to make it a lot more consensus. I felt like it's very much stage driven.
Well, I was literally about to say that, like the person at Andreessen, they have a much fundamentally different job than I do, right? They're managing billions of dollars of capital. They should not be distributing billions of dollars of capital in 300K to 500K checks. That's
Yeah.
that is just like not a a really a smart strategy. So just by that math, maybe they do seed deals or whatever, but they're probably just using seed deals as a way to track it so they could double down in future rounds. But realistically, they're trying to deploy anywhere from 10 million to 100 million of capital in any given deal. So yeah, by that point, you're playing a fundamentally different game. You are trying to invest in consensus deals, but consensus deals that have a massive market that can become hopefully even more consensus over time, and then you generate significant returns on bigger dollars. Like my job is to find the non-consensus things very early on that hopefully become consensus later on, so that then the Andreessens of the world can back it up, and then it looks very interesting. So if you look at things like um, even if you're like making the analogy to AI or whatever, the people that were investing in AI in 2016 through 2020, when AI was not interesting and everyone was rolling their eyes saying, "Oh, we've heard this story over and over and over again." Now that AI is consensus, those are the people that are making incredible returns, not the people doing seed rounds at $200 million valuations, and hoping that this thing goes to 20 billion. Because the reality is that's probably not going to work out, and you're going to burn pretty big clips of capital.
Yeah, no, fair point. Fair point. I think I forgot to ask you, how many positions do you take as a pre-seed seed investor in terms of number of companies in the portfolio?
Yeah, we tend to try to shoot for about 35 to 40.
Okay, makes
Yeah,
sense. So yeah, trying to get to parallel. Um,
exactly.
yeah. I what does the next kind of 5 to 10 years look like for you and Hash3?
Yeah, so the vision of the fund is to bring self-sovereignty to all end users. And I mean, this goes back to just sort of my personal story. That moment of my dad being able to take out assets that he had. And the next 5 to 10 years, like the goal is to continue working with founders and best in class projects to achieve that mission, and also work with people that also align with that mission to some extent. I think success for me, what does that look like? Success is finding opportunities super early on. I think one of the amazing things about venture is that everyone is telling you their secrets, right? Everyone should have a secret as to why they're starting a company, and everyone's telling you those secrets. You get to hear those secrets day in and day out. You get to think about which ones are the most credible, or which people can execute the best against it, and which ones can have the biggest impact. And obviously you hope that economics follow impact, right? If something can have massive impact, um, hopefully it will be rewarded for that impact economically. um, and that's what you get to do day in and day out, and I think the hope is to continue doing that. And that's just kind of how we look at the portfolio broadly, where we're generally investing in things, and maybe this is just the mindset I bring from traditional venture to crypto, but generally looking for businesses that can be massively value generative, and more importantly cash flow generative, because ultimately, if you look at the bedrock of how assets are valued, with the exception of some commodities and Bitcoin, I think in our sphere, well, I guess maybe a lot of crypto assets are misvalued, but cash flowing assets at the end of the day are is sort of the core way to value these things. So that's kind of the hope for the types of companies we want to continue investing in.
Okay, makes sense. And so you're a solo GP, right? So what is, how do you feel about that? What's one of the most unexpected things you found being a solo GP?
Um, I think one of the most okay. So one of the most unexpected things is sort of like the independence of thought that comes with it. So a lot of times, uh, I'm by myself thinking and reading and looking at all of these various signals throughout, whether it's through Twitter or someone messaging me something or tells me some piece of information, and I don't have any individuals to bias me on that information. Like, I get all this information, whether it's primary sources or secondary source or whatever it is, and I synthesize it by myself, and I just sort of churn through it, and I see all these signals and things, and I come up with a conclusion on what I think will happen from those signals. Um, and sometimes I go back and I talk to people who work at funds with other investors, and I sound pretty crazy. And people are like, "What are you talking about?" Like, and then I walk them through like all the signals that I have, and then sometimes those people are like 3 or 4 months later are sort of like parroting the things that I say, and it's like that's good to know. But that was like one of the more unexpected things, and I think when you're in a group setting, a lot of times you just sort of default into what other people in that group setting are saying. And sometimes you just like let them do the thinking for you, and um you're forced to exercise that muscle, like the independence of thought muscle as a solo GP, because you don't have anyone telling you. You know, my
Yeah,
dog
that's
sleeps in my office, but he doesn't tell me like what I should
yeah.
be doing. So like I'm not conversing with anyone deeply enough to have them influence me at the level of like my prior fund is like, okay, this GP who was at the fund for 20 years, if that person says something, then that's going to influence you a lot.
Yeah.
But here it's like you just don't have that.
Yeah, that's an interesting one. Final question. What's a secret obsession of yours that nobody knows about?
I don't know if no one knows about this, because maybe quite a few people might know, but I like classic cars a lot.
Nice.
And I have some classic cars, and I like working on classic cars. And I might actually like working on them more than I like driving them, which is
Right.
a kind of a weird thing because most people buy like a nice car, whatever, sports car, classic car, and they just outsource all of the work, and they just want it to work. Like, okay, you get in the car,
Yeah.
you want it to start, or you get in the car, you want it to run right, or whatever. I actually like the working on it more, and for me, it's like a very much so like a meditative thing. So
Yeah.
people go on like 20-mile runs, or people bike or do whatever. I work on cars. I have a constant to-do list of broken cars that I'm fixing at any given time, and it's just a way to kind of think through a challenge that is really, really different than my daily work, and pour through old resources. Is all my cars are mechanical, so they're like from the 70s and 80s. They're not
Yeah.
like modern cars. And Yeah, it's just a really nice way to relax. So
That's
yeah.
cool. And you've just self taught yourself how
Yeah.
to fix them.
Yeah. I've been obsessed with cars since I was a little kid. Classic cars since I was a little kid. And Yeah, I've just been wrenching on them for a while. So
Love it. Love it. Well, thanks so much for jumping on, Hootie. Really appreciate the conversation. I think it's going to be quite insightful for any new fund managers as well.
yeah, I appreciate it. Thanks for taking the time.
Of course.